Happy Tuesday, everybody. Jason Russell, branch manager, Caliber Home Loans. Hope you are having a terrific start to your week. I was out at an open house this weekend, and I've had a couple of people come up to me and they asked how I thought the rising rate environment would impact the value of homes. And there's been a lot of prognostication, especially out on like CNBC, for example, that rising mortgage rates would tank the housing market. So it's getting a lot of people the idea that, you know what, I should sit on the sideline and wait for home prices to come down, and then I will buy a house. Now, keep in mind, CNBC is the same people who have been telling you that you should not buy a house since 2012 and would have had you forego hundreds of thousands of dollars of net worth. But that being said, let's break it down, right? So the price of something largely comes down to the idea of supply and demand. And though I slept through my economics class in high school, I did have to take it again in college, and I started to grasp the idea. So I want to just kind of talk about those two factors when it comes to the housing market. So, number one, you have demand, right? The amount of people who are looking to buy a home. So even as rates have risen, the most recent data I've been able to find is that in California, 72% of all homes on the market receive multiple offers. Okay. So that means you've got at least two, in most cases, far more than that amount of people trying to buy one home. Okay, so the demand is high. But let's say interest rates go higher and push a lot of folks onto the sideline. They can't qualify for as much, or they're not as comfortable making a mortgage payment with those higher rates. Okay, that's a fair criticism, and I think it's a likely occurrence. Uh, what happens then? Well, let's say you get rid of 60% of the potential home buyers that are out there. Let's say the rates either scare them off or put them in a position where they can't qualify. Well, if you're getting 10 offers on every single house and you eliminate 60% of those, you still have four people bidding on one home. And if you've got people bidding on one home, that is a reason to continue to push prices higher. Now, that is not to say that they will continue to rise at 18 to 20% year over year, which is the most recent number that came out. And frankly, that's a good thing. We can't expect that 18 to 20% improvement in values year over year is a sustainable number. It's not. But if you have, again, using our previous example, if you've got four people bidding on every single house, then 5 to 7% appreciation of homes, which is the normal historical number we've been working from, is very much attainable. Okay. So there's your demand side of it. Even if you get rid of a lot of people, there will still be enough to buy the houses that are available. Let's talk about the other side of the equation, supply. Right now, I'll use Vacaville as an example. Right now, well, I should say in February, last month, the most recent month that data was available, 44 homes were available for sale in Vacaville last month. There are over 100,000 people in Vacaville that live there. So we have one house, we have about, well, that's not true. We have a little over two houses for every 1,000 residents. Okay. So the supply is still very, very short. National Association of Realtors suggests we are 4 million homes short of a balanced place where the supply meets the demand. Okay. So inventory is still very, very low. And what are these higher rates going to do as far as inventory? Okay. Do you think someone who is locked in at a 2.75% rate that they got last year, do you think they're going to be likely to sell their house and buy a new one? No, they're probably going to sit in that house and just wait it out until rates come back down and buy in the future. So that's one less house that's available. Supply chain issues. New home builders are having trouble finding everything from skilled labor to garage doors and to all kinds of things in between, stainless steel. All these things are problematic. So the new home builders are having difficulty building new homes, and they certainly aren't building starter homes. So you have a very diminished supply of homes while you still have a healthy amount of demand out there, even if it's much less than what we've experienced over the last few years. that still supports prices of homes going higher. So what I've been, suggesting to folks is that, look, if you get in a house today, let's say you pay $500,000 for that house and you have to pay 4.75%, 4.99%, a rate that seems crazy, right? It seems crazy over after what we saw the last 2 years. What you locked in is not that rate for 30 years, but you locked in the price of that house. Okay. When rates eventually go back down, and they will, and that's a whole nother video, but when rates eventually go back down, then you can just refinance that loan. Okay. That payment, that interest rate that you don't like, it doesn't feel good to take, you're going to be able to get a lower interest rate and therefore a lower payment down the road. But if all the market forces, the supply and demand piece that I just went over, assuming that's all accurate, then you're not going to get a cheaper price on the house, right? A year from now when rates are better. Yes, your payment might be lower, but you will still owe more. Whereas the person, if you still went in today at 500,000 at 4.75% interest rate, that person now, a year from now when rates get better or however long it takes, they owe 500,000 and can then refinance, as opposed to you buying at 600,000 or whatever it is, and getting that lower rate later. So the price that you're paying for the house, to me, it is far more important to lock that in at as low a number as possible. And so it's not to say that home prices can't go down. Anything is possible, but the data just really isn't there to suggest that that's a likely occurrence. So hopefully you found this helpful. If you have any questions, please reach out. Hope you have a great rest of your day. We'll talk soon. Thanks.